Good morning, I'm Kevin Mahoney, the founder of Illumint, and I'm outside Amazon's Washington, D.C. office to talk about what factors you might need to consider if your employer offers you equity in the company as part of your compensation package. Equity generally comes in two forms: restricted stock units, or RSUs, which I'll discuss today, and stock options, which I'll cover later this week. For now, let's stick with RSUs. Restricted stock units aren't actually stock. They're just a promise from your company. Typically, the timing with which that promise turns into shares of stock that you own depends on the company's vesting schedule. RSUs often vest incrementally, which is a sneaky way that companies incentivize you to remain in your current job. If you leave the company before the vesting schedule ends, you miss out on the shares that haven't vested yet. As RSUs vest, they also turn from a promise into tangible compensation, which means taxes. For RSUs, you'll pay taxes on the current market value of the shares based on your ordinary income tax bracket. Your company usually will withhold the tax on your behalf, so you don't need to find excess cash to send to the IRS. There's a second type of tax potentially at play here as well, which is capital gains tax. If you hold on to your vested shares for a period of time and the stock price increases, then you will owe capital gains tax on the earnings whenever you decide to sell the shares. If you sell the shares immediately after vesting though, you likely won't owe much, if anything, in capital gains taxes. Your decision to hold or sell your shares may depend on numerous variables, but keep one important thing in mind. This is an investment in your own company, which also pays your salary. If the company begins to struggle, you're at risk for both investment losses and unemployment. Ouch. For this reason, you may be better off diversifying your investment. Check back soon to learn how, compared to RSUs, stock options present a slightly different set of income and tax considerations.